Well, hello, it's Derek Grier with Realty One Group Dominion here, and welcome to the September monthly report. And the purpose of the monthly report is really to give you a rundown of all things real estate. So let's go ahead and jump right in. And I always like to start out with a little bit of an uplift. So this is something that I heard recently and thought it was pretty good. You can't pour into others what you don't pour into yourself. If you want to keep your family and your team or your business running smoothly, it takes consistent effort of pouring into them, pouring advice, energy, expertise, wisdom, care, support, and of course, love. And in order to do that, you have to seek it out and you have to accept it first. If your own heart grows bitter or your expertise is lacking, you'll run out of things to give to others. You can't draw water from a salty spring. So, avoid getting salty. You know, friends, in real estate right now, there's a lot of salty people, and there are a lot of people that aren't pouring into themselves. And the monthly report really is my opportunity to pour into you. And then if you're watching it and you're listening to it, then maybe you can use it and you can pour into others, whether that's somebody that you're working with, whether it's somebody on your team, if you're a real estate agent, or your clients, or maybe you're just a potential client of ours and you can use this information to your benefit. So that's my little uplift for this morning. And the biggest news in real estate right now as we come into September is really the Fed and their activity. You know, by the time that you're seeing this, the rate may have made some decisions. As I'm recording this, they have not made any decisions. But the Fed Chairman Powell, said that the time has come for September rate cuts. And so they're projecting that that's going to happen. Over the last 2 years, we've kind of been on this rise, certainly with 30-year fixed mortgage rates. You know, the Federal Reserve has raised the Fed funds rate consistently. But now they're saying that they're going to do something different. And when this started 2 years ago, it was like the fastest rise in the 30-year fixed mortgage rate in recorded history. And I think right now we need to remember that. So as we move forward, here we go. The September Fed rate, the rates have given rise and caused the affordability to become an issue and transactions to fall and sort of the velocity of our business to fall. And I'm here to tell you that what Chairman Powell said in late August. He said it in Jackson Hole. He said the time has come for the policy to adjust. So major shift in what they're saying and what they have been indicating is going to happen. And it's kind of like the fever is breaking relative to some of the economic conditions that we've seen, particularly with rising mortgage rates. I'm not here to say that we're out of the woods yet, not by any stretch of the imagination. But what I am saying is that we're on a different path. And so I think it's important for us to pay attention to this and know how this is affecting our business and what's to come with mortgage rates and how that impacts affordability and how that impacts consumer behavior related to buying a home. But why is this the case? Well, let's take a look. First thing, inflation in this country is approaching the target rate. Now, it's not where the Fed wants it to be, but it's approaching that rate. They're seeing, inflation is coming down, and oh, by the way, what's that other piece? Well, the unemployment rate is rising. It's below the average of the last 50 plus years, but they don't want to see, what's the word that they use, further deterioration in the labor market. But inflation is coming down. So let's look here. Unemployment is rising, and these things signal, all right, we're going to adjust policy. 80% of economists, 80% of economists said that the Fed will make a quarter-point decrease in the range of 5 to 5.25 to September. So, they've said that they're going to do it in September, and I think that's a good thing. And largely with mortgage rates, it's kind of already priced into the outcome. So, you see a little bit of an impact when rates come down, but it's not going to be a tremendous impact. You won't see the lending rates change that much. Okay, so moving on here, to keep going down the road and for this trajectory to continue, most economists expect 2 rate cuts this year. So not just one, but at least 2. Could it be 3? It certainly could. And that could change any day, just like it did yesterday when they came out with the inflation rate. It's higher than what they expected. But what we're really talking about is how many versus will they at all. Okay, so we started, at the beginning of the year, we were thinking that the Fed would have already done something, and they didn't. And now we sit here going, okay, the remainder of this year, maybe they'll cut it twice, maybe they'll cut it 3 times. But I don't have my crystal ball handy, and nobody does, so we're not sure what's going to happen. But certainly 73% of economists think that they'll cut it at least twice. Okay, so generally the rate cutting cycle is not one and done. 6 to 8 rounds of rate cuts all through 2025 is likely. So that's interesting. But what do we actually know, right? What we know is that the Fed is taking action. They've adjusted policy, and now we're on a different course, right? And then, by the way, every one of the forecasters that we follow shows that the 30-year fixed mortgage rate over the next 6 to 12 months is going to come down, right? So the one thing that they can always tell you if you try to predict mortgages is that you're going to be wrong. And I've certainly found that to be true. The question is how much and when, of course. That's really the big question. But we're in a different path relative to our business going forward. And, understanding that, I think being optimistic about what that will bring. There was a survey done last year by Bright MLS that said 70%. Oh boy. Okay. Timing the market is basically impossible. Yeah. Okay. So, I think that, what they were saying is that 70% of prospective buyers abandoned their search because they couldn't afford a home because of the rising mortgage rates. Rising prices, and those people will come back into the market. Now, I'm not here to say that we're going to see this dramatic change and sort of have the rose-colored glasses on, but I am saying this will cause a little bit of a wind, a little bit of a slight wind at our back. And nobody's going to get blown over by this wind, but it'll cause some good things to happen. And I think a lot of people right now are wondering, if now is the right time to buy a home. If mortgage rates come down, maybe I'll wait until they come down. Well, my question to you is this: what do you think everybody else is going to do? What do you think everybody else is going to do in that scenario? Well, I think the reality is that the opportunity is right now, before that happens. It's the age-old question of, timing the market. And this comes from LendingTree. I got a little ahead on my slides there. Timing the market is basically impossible. If you're always waiting for the perfect market conditions, you are going to wait forever. Buy now, only if it's a good idea for you, right? So you got to look at your own family conditions, your own situation, but certainly if it makes sense for you and your family financially and you can afford it, it's a great time to buy a home. I really do believe this because there's a window of opportunity that buyers have. There's more inventory in the market. It's a little bit more expensive than it was, but it's there, the inventory, because as we go through the next year, more people are going to step back into the market. One of the things that as we think about that and dynamics across the country continue to change, there's a very clear thing that is happening in the market. The market is starting to balance. Buyer's market, seller's market, they're heading by and large in a way in most areas of the country to be more balanced. And I want to just break that down really quickly. What does that mean to actually be in a balanced market? Well, U.S. News says that in general, a housing market 5 to 7 months supply could be described as a balance. Realtor.com says 5 to 7 months. CNBC says 6 months is considered balanced. So there's kind of this widely held sort of thought that 6 months is a balanced market between buyers and sellers. And we've been in this prolonged seller's market. And I really believe a couple of things. One is that we're heading into a market that's more balanced. I do believe that. That it's sort of going to be dictated by what happens with mortgage rates. If mortgage rates fall and we dip our toe in that, we'll see more people coming into the market, maybe a little bit more of a seller's market or a little less of a seller's market than it has been, and as, economic concerns are alleviated, becomes more of a buyer's market as more sellers get into it. So no doubt, though, that if we look at this and we take the approach that we just talked about, this 5 to 7 month window right now before the rates go down, there's sort of a balanced area where we see things bumping up against it. And I don't think we're going to go fully into a buyer's market anytime soon, for sure. But maybe we'll dip our toe into what that balanced market kind of looks like. And we'll come out of this massive seller's market. Anyways, so, anybody who's thinking about buying a home is going to benefit by this, these next couple of months. I think are going to be a good window. Okay, so quote, homes are sitting on the market a bit longer and sellers are receiving fewer offers. More buyers are insisting on home inspections, home appraisals, and inventory is definitely rising on a national basis. So inventory is sitting on the market longer. Inventory is rising. There is not a market in this country that is not experiencing a rise in activity in inventory. So most markets right now are seeing inventory rising, and oh, by the way, homes are also sitting on the market longer, which is what's kind of causing this, go from 30, 40 days on the market on average to up to 50, 53 days on the market, according to Realtor.com. So, sellers may be receiving fewer offers. We're certainly seeing that in our business, where a couple years ago you might have gotten 10 or 15 offers. You're getting 3 or 4 offers, on a decent house. And, let's see here. Sellers may be receiving fewer. July 2023 to 24, went from 3 to 2.7 offers. Going down, so from 3 to 2.7. I say 10, 15. Our market is a lot different in St. Louis here in the areas that we work in. Ladue, Town and Country, Chesterfield, Baldwin. Those are some pretty popular and high demand areas. So we certainly see a lot more demand in our area than perhaps across the country. But the average across the country has gone from 3 to 2.7. So I think there's this feeling right now that inventory is rising and sellers may not be seeing as much activity, right? I think if you talk to most agents, and we were on a panel this morning where a number of brokers and agents were saying that very thing. So, I think that pricing becomes critically important, and that is going to be the name of the game here as inventory increases, is making sure that your pricing is accurate. Okay, I missed all of these slides. I don't know why I missed all of these slides, but when inventory rises faster than demand, prices have to adjust eventually. Increasing inventory levels are a sign that the market is starting to balance out. So, that's kind of where the pricing piece becomes so important right now. Pricing your home is critically important. So let's take a look at some graphs here. Okay. So, what we're seeing is that the number of price reductions is increasing across the country. Every month it's going up and up and up. And if you look at this chart here, the August numbers haven't actually come out yet, or maybe they just came out, but they're expected to go up from what this chart even says here. So, we're thinking about this, and you tell a story with the price that you set for a home. And when we've seen this steady rise in price reductions, and that trend is continuing, the story is that if you price it right, it's going to sell quickly. But if it's not priced right, it's going to require a price reduction. And it's going to require going to people and say, hey, we've got to do something different here. We can't just let it sit here. So Mark Fleming said this: the faster housing supply increases, the more affordability improves and the strength of a seller's market wanes. And that's where we're at. I think that's the market that we're going into. But it's going to be the tale of two markets. Buyers markets over here in some parts of the country, sellers markets over in other parts of the country. And even in our area here in St. Louis and St. Charles, you see kind of different buyers and sellers markets depending on where you go. But I think that in certain areas, it's still very, very solidly a seller's market. And I think we're going to see in other areas, it's a very, very solidly buyer's market, So let's look here. Let's look at a list from Zillow. These are the top buyer's markets right now. And, what do you see? You see a lot of Florida and Texas there. Which ones are seller's markets? Well, you see New York, you see California. So we're starting to see this separation of the two areas. And I think the bottom line is that folks right now need to be prepared for that. You need to be prepared and understand the market. And remember, we talked about pouring in so that you can pour out. Well, this is the information I want you to take away and be able to share with people to give them information so that they can make wise decisions. So Lisa Sturdivant with Bright MLS says, buyers and sellers need to be prepared. Sellers should expect more prospective buyers to make an offer contingent on an inspection, more contingencies and repairs and improvements, and all the things like that. Buyers having their ducks in a row is critical. So get pre-approved, getting all the things done. Even though mortgage rates are falling and the rate and type of loan you can qualify for, making sure all of that is figured out and having a game plan, being ready. That's what we're talking about right now. I think the bottom line is that whether you're selling your home in a buyer's market or a seller's market, whatever it happens to be in your part of the country or county here, you should work with an agent, work closely with them. And I really believe that 100%. The best way to market and sell your home is to work with an expert. I think, everything with like the NAR settlement, a big question right now is, where should agents focus their time? If you're a real estate agent, where should you focus your time? And I think it's right here. I think it's being able to articulate and show the value of what you bring to the transaction. That's critical. And I think that's going to be critical over the next 90 days, right? Being the expert in your market, showing people what we're talking about here, the knowledge and information. So, the other thing that's going to be very, very important is pricing. Is pricing the home at the listing, how important is that? Well, in most markets right now, if a home is priced right, it's selling. I think basically that if it's overpriced, it's going to expire and you're going to go to a lower price eventually, and then it will sell. I don't think that everybody realizes that, but here's what it shows. It's the facts about why price is so important. Let's look at some charts here. Okay, so one of the things that's very, very clear is, I'm happy to give anyone that wants them these slides to be able to show your clients and folks that This is a look back, Case Shiller, from a year-over-year price, the year-over-year price changes from 2022. And the graph starts right there in 2022. And you see price appreciation, somewhere in the neighborhood of the high teens, in 20% in some cases, right, in some areas of the country. And then we dip down in 2023, and then, it's come back up to the range of 3, 4, 5%, depending on where you are. And I think that's very normal price appreciation, that 3, 4, 5%. That's very normal. And that's what we see in the rear view mirror, before kind of the craziness of 2022. But what it means is that because we've kind of recently seen those things, and in the very not so distant past, price appreciation was so high that sellers, they're wanting to price their homes what I call aspirationally, right? And that's getting them into trouble. Lawrence Yun said that homes priced right are selling very quickly. And I think that's true. But homes priced too high are deterring prospective buyers. If something's priced right, then it's going to sell. It's going to be something that folks are interested in. They want to move towards. No doubt about that. So what are two things that you really need to understand? Well, I think these are critically important. So write these down, these two things. All right. So what is the seller's motivation? What do they want? Sure, they want as much money as possible. Everybody wants that. But what else? What else are their motivations? Maybe it's a bigger home because their family has grown. Maybe it's to be closer to friends or family. Number two, what is the seller's time frame? Do they need to sell as quickly as possible? Will it be a while before they can move into their next home? What's your motivation if you're a seller? And why are you looking to sell? So, some sellers that don't have much motivation are saying, hey, let's price this aspirationally, right? Like, let's see what price we can get for the home. Well, they're probably not going to get anything. And if you're an agent, you're going to end up wasting your time. So what is the seller's time frame? Do they want to sell it quickly? If I understand their motivation and their time frame and have those things understood where it makes sense, then I can give the best advice on how to accomplish that. So, there's 5 things really that every seller needs that they need. So let's talk about them. What are they? So 1, they need the house sold. Duh. Okay. Number 2, they need the most money possible. All right. Number 3, they need the sale to occur in a certain amount of time. And 4, they need the least amount of problems. That's where a realtor really comes in handy. Somebody who's an expert can help keep a lot of problems from ever happening. You don't have to solve problems that are prevented from happening to begin with. And number 5, they want you as a real estate agent, if you're a real estate agent watching this, they want you to help them with the location of their new home, right? With the relocation to their new home. So they want your help in figuring that piece out. And here's a visual that I love. Okay, so it shows why pricing your home matters. Why does it matter? Well, if you're underpriced, you're going to lose value and you're going to decrease your buying power in where you're moving to and on the other transaction. And it's also going to deter potential buyers because they start to wonder what's going on there, But if you're overpriced, it's going to sit on the market longer. And we talked about that. Possibly the listing will expire and potential buyers don't look at it, and price drops, they don't really drive a whole lot of interest there, and they start thinking maybe they're desperate. They wonder what's happened, what's wrong with the house. So we really want to be at market value. And I use this graph. Anybody that I sit down with a listing presentation, I say, this is what you bring with you. And this is how you show, why market value is so important. And why we understand what the market will bear and looking at those comps and understanding how the market is shifting based on what you're trying to accomplish. So U.S. News said that setting an unrealistically high price with the idea that you can come down later, it doesn't work in real estate, okay? A home that's overpriced in the beginning tends to stay on the market longer even after the price is cut because buyers think there must be something wrong with it. And I really think that's true. By the way, we've got the facts to prove it, right? So aspirational pricing, it doesn't work in this market. It just doesn't work. When you're coming off of a strong seller's market into a more balanced market, it doesn't work. So if you look at here, it goes up every single month. The number of price reductions is increasing. Every month it's going up. So help your clients to understand that. And if you're a potential client of ours, I'm going to show you this and we're going to look at this and we're going to say, okay, look, do you want to be stuck sitting on the market and not be able to find that new home and purchase the new home because you're stuck in the old house because you priced it wrong? We're going to be looking at that. Okay. So, all right, I'm going to wrap up this monthly market, this way. I had another slide here. I read that. Okay. we've got a lot of things that are happening right now in the world of real estate. We've got the NAR settlement. We've got mortgage rates that are changing, and we're starting to see some of the volatility, come down a little bit, which is really a good thing. And what we have, these issues of pricing and sort of turning the corner on a lot of this stuff. Now is the time to put in the work and be out in the market. Be the knowledge broker and the educator for those that you serve. Again, if you're a real estate agent. And Steve Harney, the founder of Keeping Current Matters, which, full transparency, it's where I got a lot of this information from. They're a great service. He said this, and I believe it to be true. The character you show over the next 90 days will play a huge part in the reputation you enjoy over the next 10 years. Think about that. And the character you show in the next 90 days will play a huge part in your reputation over the next 10 years. This is the market to build your business in. The way that you do it is by being the knowledge agent, being the educator with the facts. So, if you're an agent, use that information. If you are part of, our SOI, our family and friends, a potential client, I hope this has been helpful to you, and you can use this information as you start to make the decision and go through that process of deciding when is the right time for you. I think I've shown pretty clearly that if you are thinking that you want to be buying or selling, now is the time to do it. The market is going to continue to shift. It's going to get more balanced and potentially harder to buy and to sell a house. So now is a great time for us to have that conversation. I will see you back next month for another monthly market report. And I'm always, of course, very grateful to each and every one of you, everyone that tunes in and listens. And until next time, take care.